You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 19th day of September, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast, that's our live training room. So that one is reserved for members only or those taking the 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. It'll take you less than 5 minutes to get signed up. There's no credit card required. We'll get your indicators up and indicating today, so you'll be able to get familiar with them over the weekend. And then your trial will officially start Sunday night at 6 p.m. Eastern when the markets open. That's when we go to work. And we'll run all the way through next week, right on up until Friday afternoon at 5 p.m. Eastern, when the futures markets close for the week. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back for this broadcast, the noon broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go here to mytradingiq.com. Scroll down the page to where it says noon broadcast. Click the link. Fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there's a link, so at 12 noon Eastern, you just click the link in the email, and it logs you right into our platform. Benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, so you can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. But you don't have to remember all of that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,900 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it is a great resource to have at your fingertips. And again, it allows you to see exactly how we've evolved over the years. youtube.com/CFRN. This is our schedule for each afternoon broadcast. About 1 o'clock Eastern, or 1 hour into the broadcast, Michael will join us for a recap of what happened this morning in the live training room, and then a little live trading on the TradingView platform. But we'll start where we always do, with our daily devotional. We're in day 2 of this topic: what happens in the end. Our scripture today is 1 Corinthians chapter 15, verses 20 through 22. And I'm going to share it with you from the NIV translation. But Christ has indeed been raised from the dead, the first fruits of those who have fallen asleep. For since death came through a man, the resurrection of the dead comes also through a man. For as in Adam all die, so in Christ all will be made alive. 1 Corinthians 15, verses 20 through 22. The resurrection of the dead. Will there really be a resurrection? Yes. The resurrection is central to our hope. Because Jesus rose from the dead, we too will rise. He is the first fruits, the model and the promise of what's to come for every believer. There will be 2 resurrections. The first for believers, and the second for unbelievers. Believers will be raised to eternal life with Christ, receiving glorified, recognizable bodies. We will still be us, but perfected, just as Jesus was after his resurrection. Unbelievers will also be resurrected, but they will face a different outcome: a final judgment and separation from God. These truths should stir urgency and compassion in our hearts. They should remind us that eternity is not a myth or a vague idea. It's a reality that we're all heading towards. We can rejoice in the assurance that death does not have the final word. For those in Christ, eternal life has already begun. And for those who do not yet know Jesus, we are called to intercede, to share the gospel, and to pray that their names will be written in the book of life. The resurrection is not just a theological concept. It is a destiny-shaping truth. I encourage you today reach out to someone who does not yet know Jesus. Pray for their salvation and ask God to give you that perfect moment to share His love and truth with them. Let's pray. Risen Lord, we thank you that Christ has been raised from the dead, the first fruits of those who have fallen asleep. Just as in Adam all die, in Christ we are made alive. Fill us with resurrection hope, strengthen our faith, and help us to live each day in the power of your victory over death. In Jesus' name, we believe and pray. And everybody said, amen. Amen, and happy Friday. It's here. The weekend's upon us. If you're in the greater Phoenix area, Charlie Kirk's funeral will be held where the Cardinals play football. What is it? The State Farm Arena? Is that what it's called? It's one of the insurance companies bought the naming rights to it, but it's northeast, out towards Surprise, Arizona, which is the northeast part of the sprawling metropolitan Phoenix area. We're on the list to attend, my wife and I, but the traffic getting in and getting out is going to be so tough. We're thinking we might just have a better seat right from our living room, from the big screen. So we're on the list in case we change our minds last minute and decide to attend. But for a service that'll probably last a couple of hours with all the different speakers, add to that 2 hours getting in, then 2 hours getting out with all the traffic. Yeah, I don't know. All right, numbers from around the world. Here we go. Starting in the U.S. with the cash markets, or the indices as they're called. The Dow's currently up 98 points. The Nasdaq's up 94. S&P 500 is up 15. But the Russell 2000, our man in the street, is down 14. In the commodity basket, crude oil is down 70 cents, trading 62.87 last. That's a drop of a little over 1%. Gold up $27, trading 37.0540 last. Silver up 91 cents, trading 43.03 last. That's a gain of well over 2%, or almost $5,000 per contract traded. I want you to think about this. Silver is at just over $43. Silver has been to $50 twice in history. Once in the 80s when the Hunt brothers tried to corner the market, and then a few years back of its own accord. Now we know important prices, important areas are almost always tested. My hope is that this third test of that $50 high water mark, we break through it, and then we know when we have a big leg, we get a nice retracement. My hope is that that $50 high water mark, which has been resistance for all of history, will become support. Now, don't want to get ahead of ourselves. We're not at $50 yet. We're still $7 out. But looking good at $43. 43.04. And the Asian markets at the close. The Nikkei dropped 257 points. Shanghai fell 11. The Hang Seng was basically unchanged on the session. It was up a tick. And the European markets at the close, FTSE down 11, DAX down 35, the CAC down 1. So we had a red day in Asia. It was a red day for the UK. And at the moment, it is a mixed Radio Friday here in the US of A. We got 3 of the major indices in the green, not by a lot, but nonetheless in the green. And the Russell 2000 down 13, which is about 0.5%. Could the Russell possibly be pointing us at the future of this market? Guess we'll have to wait and see, won't we? Now, you've heard all the claptrap over Jimmy Kimmel. He wasn't very funny, and his ratings were in the toilet. But of course, the left's trying to turn this into a First Amendment argument. Freedom of speech. He should be able to say whatever he wants to say. I got news for you. ABC and Disney probably would not have booted him to the curb if he had a big audience, if people were actually tuning in to watch him. But he stopped being funny years ago. There was a time when he could turn a joke. But over the last few years, it became nothing but a nightly political rant. And you know what? People got tired of it, and they just tuned him out. So ABC and Disney took this as a fine opportunity to save themselves $100 million a year. That's what it cost them to produce 1 hour of television programming, late night, the Jimmy Kimmel Show. $100 million a year, and a staff of, I think, almost 150 people to produce a not very funny show with a very tiny audience. But it's all about free speech. Okay. Well, there's no law that says ABC or Disney have to foot the bill for a sinking ship. He can go start his own little podcast, you know. Sure, that's what he'll do. Will he be any more funny that way? I don't think so. We'll see. I think he forgot how to be funny. A vaccine advisory panel for the Centers for Disease Control and Prevention meets for the second of 2 days today. It is expected to recommend delaying the hepatitis B vaccine administered to newborns, and will also discuss COVID-19 vaccines for children. Now, how do you get hepatitis B? Well, primarily you get it from sex or from sharing a needle with a fellow drug addict. How many newborns do you know having sex or shooting up drugs? Not a lot. Now, hepatitis B is certainly no joke. It can cause serious liver infections. When an infant is infected, up to 90% develop chronic infections. The virus can be transmitted from mother to baby through sexual activity or intravenous drug use. In 2021, nearly half of 1% of babies were born to mothers who tested positive. The CDC has nonetheless recommended all infants receive the first dose at birth, an approach corresponding with a higher percentage of babies completing the dosing schedule by 19 months. The panel is expected to recommend that babies wait until they are at least 1 month old to receive the first dose, assuming that the mother tests negative. Now, did you know that this is very different when you and I were kids? We got like 3-4 vaccines as young children. Not as newborns, but as young children. I remember being old enough to be scared of the needle. But the modern child, by the time they turn 18, they've had almost 70 vaccinations. 70. Do you think that's necessary? Maybe it is. Uber Technologies announced plans yesterday to begin aerial food deliveries in partnership with Tel Aviv-based drone operator Flytrex. The service will launch in unspecified test markets later this year. Uber shares closed up yesterday 1.9%. Uber first attempted drone food delivery in 2019 with an in-house aerial arm, but regulatory hurdles stall the effort. It's now investing an undisclosed sum in Flytrex, one of 4 companies approved by the Federal Aviation Administration to fly drones beyond operators' line of sight. Flytrex has delivered over 200,000 meals to suburban homes in the last 3 years and partnered with Uber rival DoorDash in June to serve the Dallas-Fort Worth area. DoorDash also uses Alphabet-owned Wing for drone deliveries in Texas, Virginia, North Carolina, and Australia. Drone deliveries could become increasingly common if the FAA passes a rule proposed last month, easing operating restrictions. Supporters say the rule would expand access to goods and cut emissions, while critics warn of safety risks. Now, we've heard a lot about the robo-taxis of late. Now, I always wondered how this could be cost-effective, this whole aerial food delivery thing, or groceries or pharmaceuticals or whatever the case might be. But if they can just program in an address and use GPS, so in other words, there's no one sitting at a screen flying this drone to my house to drop off the pizza. They just punch in the address, the GPS finds the latitude and longitude, and the drone just automatically goes to that latitude, longitude, and lowers the pizza to the ground and takes off. Guessing that's how they do it. I am going to post right now while I'm thinking about it. In the Breeze channel in Telegram, I'm going to post a video where you can actually, well, here, let's do this, and you can see it too. What do you say? What do you say? What do you say? Okay, maybe that won't work that way. Now it wants to open it in my browser window.
With Liberty Mutual, you can customize your car insurance to save hundreds.
it's got sound. So let's skip the commercial. This is a little dicey, but we give it a shot. Okay, now you can't hear the audio, but if you go to the Breeze channel, you can hear the audio. Just click the link. So here's the drone. And I guess the food goes in that little box. And they're not just dropping that, are they? Yeah, I guess you really need to hear the audio so you can understand what's going on. Now, I bought a couple drones for my son over the years. Inexpensive ones. You know, toys, basically. But these are the big boys. These are the real deals. So, anyway, I just go to the Breeze channel, Telegram, and have a look-see. Okay. Flytrex, also a company you might want to take a look at. This works out. If they're a public, now they're out of Tel Aviv, there's probably some way you can invest in them. I'm going to guess. Time will tell. Okay. So, back to where I was when I left off. Oh yeah, the news. That's how we got on that topic. Is it not? It is. Keep closing that browser window. It keeps reopening. Stop. All right. Okay, we're done with the Uber drone delivery. Let's go to Wall Street. The highly anticipated call between President Trump and his Chinese counterpart is underway. Now, this article was a couple hours ago, I think, is when it was published. Quite a few hours. So this call is probably already over, and there's probably news out there about how the call went. I'm sure it went great. The fate of TikTok hangs in the balance, and potentially the trade relationship between the world's two largest economies hanging in the balance. Trump this week set lofty expectations for the call, which began at 8 a.m. Eastern. Yeah, I'm sure the call's over by now. The president is expected to share updates on the conversation later on social media. I haven't seen anything pop up, so maybe it didn't go so good. Before the call, the president described a deal over TikTok as all but completed in multiple comments, adding that he is looking to make progress on broader issues like tariffs. My relationship with China is very good, he added later in the day in a Fox News interview, and it sounds like they have approved TikTok. The president then added that he is also looking to discuss an array of issues with his Chinese counterpart, from Russian oil purchases to tariffs, saying we are very close to deals on all of it. All right. House Republicans advanced a bill today to keep the government open for 7 additional weeks in an attempt to pressure Democrats to relent and accept their plan to avoid a partial government shutdown that could start at the end of this month. Man, how many years? This is how our government functions. It's literally like, a family living paycheck to paycheck, of which there are a lot of those in America today. And I suppose over time always have been around the world. Not just in America. But should the world's superpower be living paycheck to paycheck? Now, the 217 to 212 vote in the House of Representatives was on a measure to keep the government open until November 21st and provide additional millions for lawmaker security in the wake of the assassination of Charlie Kirk. The vote came in almost exactly on party lines, with Thomas Massey of Kentucky, Victoria Spartz of Indiana, and Jared Gold of Maine crossing party lines. Massey and Spartz are two Republicans who bucked their party to vote no. Golden is a Democrat who voted yes. The Senate is aiming to take up the measure later today. That's where things could get bumpier, with the 60-vote threshold there, meaning Democratic votes are needed for passage. So, do the Democrats want to be blamed for shutting down the government? I don't think so. The Treasury Department is moving closer to making President Donald Trump's no tax on tips promise a reality. But new guidance released today tends to limit the number of tipped workers who will be able to claim the benefit. The agency submitted proposed regulations to the Federal Register that includes greater detail on the occupations covered by the rule and who will qualify and what counts as a qualified tip. The no tax on tips provision in the Republicans' massive tax and spending law signed by Trump in July eliminates federal income taxes on tips for people working in jobs that have traditionally received them and allows certain workers to deduct up to $25,000 in qualified tips per year from 2025 through 2028. The deduction phases out for taxpayers with a modified adjusted gross income over $150,000. To qualify as a tip, tips must be earned in an occupation on the Treasury list of qualified occupations. Among the jobs exempted from tax on tips are sommeliers, cocktail waiters, pastry chefs, cake bakers, bingo workers, club dancers, DJs, clowns, podcasters, influencers, online video creators, ushers, maids, gardeners, electricians, house cleaners, tow truck drivers, wedding planners, personal care aides, tutors, au pairs, massage therapists, yoga instructors, skydiving pilots, ski instructors, parking garage attendants, delivery drivers, and movers. To qualify as a tip, among the jobs exempted from tax on tips, well, who's left? If that's the list of people that it doesn't count, who's left? The Yale Budget Lab estimates there were roughly 4 million workers in tipped occupations in 2023, which roughly amounts to 2.5% of all jobs. I love the way they make things intentionally confusing. Investors may have cheered NVIDIA's announcement that it will take a $5 billion stake in Intel, with shares of the latter soaring as much as 30% yesterday. We talked about that. The investment does little to solve what is arguably Intel's biggest problem: how to fix its ailing contract chip manufacturing business. As part of the deal, which gives NVIDIA a 4% stake in Intel, NVIDIA will use Intel's CPUs in its AI data center server systems, and Intel will use NVIDIA's AI tech in its semiconductors for personal computers. But crucially, the agreement made no mention of Intel's manufacturing business, Intel Foundry Services, the segment of Intel that has drawn widespread attention from investors and the U.S. government and is struggling with heavy losses as AI has upended the chip market. Boy, that took all the air out of the room. From Reuters, investors withdrew massive capital out of the U.S. equity funds in the week ending September 17th, as they turned cautious about the market's lofty valuations following the recent rally through a policy cut by the Federal Reserve and rush to lock in profits. according to LSEG Lippert data, investors pulled out a net $43.19 billion from U.S. equity funds in the week, logging their largest weekly net sales since a $50.62 billion weekly outflow in mid-December of 2024. Now, this is happening as the market is putting in new all-time historic highs. Really. And last, at MetaConnect 2025, the company's biggest event of the year, Zuckerberg unveiled 3 new smart glasses: the second generation Ray-Ban Meta, the Meta Ray-Ban display and wristband controller, and the Oakley Meta Vanguard. Meta says it has sold 2 million of the first generation Ray-Ban Meta smart glasses, and earlier this year, Meta unveiled its latest AI-powered smart glasses with Oakley, which were designed for athletes. Silicon Valley is leaning heavily into AI wearables, and Meta seems to be one of the companies leading the charge. Now, the one that comes with the neural wristband and is the most expensive one actually it's like a tiny computer display inside of the glasses when you're looking. I need to go somewhere and actually try a pair on. I'm not going to buy any. When the iPhone came out at $600 many years ago, I said, when it gets down to 300, I'll buy one. And I did. I waited. When the price finally got down to 300, I bought one. It was the first version. When these glasses get down to $100, I'll put them on my wish list. Okay, let's get moving. Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, silver. We're in week 372. That's a little over 7 years. Valerie did the recap this morning at 6:30 a.m. Eastern. Over the last 372 weeks, we have issued over 20,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. This week, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 40 alerts. It's a little less than normal for a week because we didn't put anything out Tuesday night ahead of the Fed. So we issued 40 alerts this week, still waiting on the outcome of 12. Remember, Valerie did the recap at 6:30 a.m. Eastern this morning. So these numbers will change, and she will finalize the recap for the week this afternoon, this evening, tomorrow morning, as she does. At the time she did the recap, we were still waiting on the outcome of 12. It gave us 28 actionable alerts, of which 2 or 7% would have been stopped out based on simple market structure and a simple process we teach all of our passport holders. Now, every logic alert has an entry price, long or short, an initial target designed to help you get your goal for the day, typically additional targets, and then, of course, a final trade to target. The real purpose behind the logic alerts is to help you learn how to read a chart. You might look at some of the alerts and go, well, gee, that triggered while I was sleeping. That's okay. Even though you didn't have the opportunity to trade it, you can certainly have the opportunity to learn from it. It's simply a matter of drawing horizontal lines. Okay, this is where the entry was. This is where the initial target was. And if you look left, you'll see the reasons. It's pretty easy to see. But you gotta actually do the work. So the question is, do you really want to trade for a living? Well, then you really need to do the work, and you really need to learn how to read a chart. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, 372 weeks is a very long time, but long before there was a Logic 247, we had our original alert service, the concierge trade alerts. Now, they're different in a number of ways. First off, they don't come out around the clock. They're typically posted 5 minutes ahead of the Globex open each evening. The Friday session that we're in right now began last night at 6 p.m. Eastern. All of our traders, all of our trial members had all of these targets 5 minutes before the market opened last night. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go take a look at where we are now. We'll start with the S&P 500. New all-time historic high yesterday. New all-time historic closing high yesterday. We have not yet put in a new all-time historic high yet today, but we could, if we hold up in this area, we could have a new all-time historic closing high. And if we continue to move higher, well, we could have a new intraday high as well. This thing's getting very long in the tooth. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. It stands for bull bear cross. You'll notice that the pullback to the BBC holds more often than it doesn't. But this market needs a much deeper retracement. Okay. Now, the shallowest possible Fibonacci retracement at this point is down here at basically 6,300. That would be a 400-point drop from where we are right now. And that's just barely enough to keep the bull market healthy. What we really need is a 38%, or even better, a 50% retracement. And then we could rally like nobody's business into the end of the year. This is getting quite worrisome. And as you can see, the step line, each day it's creeping closer and closer to being on the right side of blue and climbing. And when that happens, we know we'll at least get a retracement back to the BBC, which right now is aligned with the 62% fib extension. But what the market really needs to stay healthy. And you see this 24 lines up with this area right here, okay, where the market found support on 1, 2, 3 occasions. Now, back then, this was not the 24% retracement. I mean, this was a new all-time historic high right here. This is when you hear me talk about important prices, important areas, okay? At the time when we found support 3 days in a row, or 3 times across a number of trading sessions, we had no way of knowing that that would ultimately become the 24% fib retracement. Meditate on that over the weekend, okay? All right, all alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago, and I've stayed with it. It's not broke, leave it alone. You don't have to choose 30 minutes. You can choose something different if you wish. But whatever you choose, stick with it. The vertical line separates today, Friday. Here's Thursday. Here's Wednesday, Fed Day. The horizontal lines are the weekly trading zones. We've published the weekly trading zones every week for our members. since December 14th of 2009. Over 15 and a half years. When price rallies up to a zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support until proven otherwise. This was the opening candle last night, and remember, everyone had these targets. All of our members and Tron members had these targets 5 minutes before the market opened. We opened the session, the Friday session, opened last night at 6,700 and ran up to 6,705. So, in the first 30 minutes, there was 5 points available. You only need 2 points to get your goal for the day. Why would you go long? Because you're above the BBC. You look for long opportunities above the BBC, short opportunities below the BBC. Just like this, price gets below the BBC and takes us right down to the short target. We spike it a little bit to an area that I would have probably ruled out over this, but if you look right here, you see where the step line cross blue and climbing? Is that not spot on? It is. Support will always send the market looking for resistance. First, it consolidated at the BBC, finally broke through. And we hit the long target, we spiked it just a little bit. Now, the long target was based off of this right here, aside from yesterday, okay? But it spiked up to this area right here, okay? But you can see that it closed back below the long target. We spiked it again on this candle, but closed below it. Headed back to the BBC. We spiked the BBC. We even touched the short target, but the pullback still held because all of these candles, both of them are touching the BBC. There was no pull away, okay? So we spiked it, touched the short target. So first we hit the short target, then we hit the long target, then we hit the short target, and now it looks like we're about to hit the long target again. Or we're at least making a real good attempt. On the Dow, here's where we opened last night. We opened at 549, and we'll call it 550, and ran up to 608. So 50 points. It only takes 20 points to get your goal for the day. And all you needed to know was you were above the BBC. You had blue and climbing below. And you had the step line above blue and climbing. That's all you need. Go long. Very simple. Now, we ran into resistance ahead of where I expected there to be resistance, right here. You can see that. So that sent price all the way down to the short target and the weekly trading zone. The trading zones have been incredible this week. Yesterday, look where we found resistance. Look where we found support. Support. Going back to Wednesday, Fed Day. Where do we find support? Now, this was when the press conference started. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Our traders have such an incredible leg up on all the other traders out there, because they have these zones Monday morning well before Wall Street even wakes up for the week. Resistance at the zone, support at the zone, over and over again and again. Only one of three things happens when price encounters a weekly zone. 70% of the time, it's going to be consolidation. 20% of the time, rejection. 10% of the time, the slice. So, We open this resistance I wasn't looking for. Obviously, I expected it here. We come back down, we hit the short target, we get below the VVC, we go to the short target. Remember, once we're below the VVC, we look for lower prices. It took us right down to the weekly zone. And we spiked it a little bit. Okay. We spiked that low by just a little bit. Support sends us to resistance. Resistance sends us to support at blue and climbing. And blue and climbing walks us right up to the long target. In fact, we spike the long target and we hit this spot right here. You see where blue turned to red? See that? I know it seems like magic. It's not. It's just market structure. Okay. So resistance will send the market looking for support, which it found at the short target. Now, when this candle opened, it ran right up to the long target. You see that little wick? And then it dropped all the way to the short target. Then caught quite a bounce. And then it came back down again, hit the short target again. And then we hit the weekly trading zone again. And that bounced us up almost to the long target, and we still might hit it. We're above the VVC. And you see how red and falling's curling up? If that becomes blue and climbing, you can expect that we will hit this long target again. Okay. The Russell, here's where we opened last night. The open was 24.9870. No, wait, hang on. Open 24.8970. So let's just call it 24.90. Took us up 7 points to the target. You only need 2 points to get your goal for the day. Resistance will send the market looking for support. Okay. This support right here came in just above this low right here. So that sent us up to touch the long target one more time. Resistance sends the market looking for support, which it found at the highest weekly trading zone. This is the highest weekly trading zone. Okay. Now, talked about this yesterday. If we get above the highest weekly zone, by close of business on Friday, we expect price to be back at the zone or below. And where are we on this Friday afternoon? We're below the highest weekly trading zone. That's kind of how it's worked for 15.5 years. Look at this high here and this high here. They both spiked the long target, right? Double top. That sent the market lower. We found some support right here. This little crevice right here. It bounced us up to red and falling. Step lines trying to cross red and falling. If it can, we may revisit the zone overhead and the VVC. If not, then if we can break this low right here, we should glide right down to the short target. And if we get through the short target, we could see this zone down here. But again, we expect price to close at or below the highest zone, or at or below the lowest zone if price is going in the other direction. On the NQ, yesterday you can see where the high came in, right? Now that is the highest weekly zone for the NQ. We spiked it and spiked it and spiked it, but we couldn't close above it. We opened last night, kind of went sideways. We dropped to this area here, not a spot I would have really looked for support, but that's where buyers chose to come in. We hit the zone, spiked it just like we did yesterday, pulled back to the BBC, Now we're actually above the highest weekly zone for the NQ. However, by close of business today, 5 p.m. Eastern, we expect price to be at or below the highest weekly trading zone. Is it possible we could close above it? Sure. It's happened a few times over the last 15 and a half years. But we'll have to wait and see. And we'll talk about it on Monday. All right, crude oil. Here's where we opened last night. Right at the zone, below the BBC. And it didn't take too long to get down to the short target. Support bounced us up to resistance. Resistance sent us down to support. If you go look left, you'll see where that came from. Support sends us up to resistance, down to support, back to resistance. When price trades through a short target on the retracement, that short target will often become resistance. Same, I showed it yesterday, we had it happen on the long side. See how we trade through and then the retracement? That target that was the short target now becomes resistance. Resistance, resistance, resistance. We spiked it a little bit here, okay, but look where we closed, below the BBC. And then look where the low of the session is, right at the weekly trading zone. The zone 6260/65. The zones have really done a great job this week. Better than normal. Here's where we opened last night, 6 p.m. Eastern. And by 8 o'clock, we had dropped to, nope, by 7:30, we had dropped to the short target. It was during the 7:30 candle. So support will send the market looking for resistance, which it found at the weekly zone and the BBC, the pullback held. That sent us back down to the short target. We spiked it a little bit, quickly reversed and made a run all the way up to the long target, which was based off this bearish cross right here. That's when the red line gets below the green line and leads to an extended move. The first time price revisits that area will almost always be good resistance. And it was. That sent us back down to the BBC and the zone. Support sent us back to resistance, which sent us back to support at the zone, and has now sent us back to resistance at the zone. And you see how we just poked above a little bit. If you follow the horizontal line on the cursor, Friday, Thursday, Wednesday, see this bearish cross on Wednesday? That is exactly today's high, right there. The zone's 3708/3709. The high is 3709.5. Step line getting ready to cross blue and climbing. Look for retracement back to the BBC. And silver. Again, this is really important. Silver's been to $50 twice in history. In all of history, twice. And here we sit, just below $43. So we opened last night, we caught a little drop, and you see right here where the black step line crossed red and falling. See that? That's this low right here. Support sent us to resistance, the zone to the tick, back to support, and then up to the long target. We spiked the long target, but we closed right at it. Then we traded through and found resistance at the zone overhead, which was also the high, this high from Wednesday. Resistance sent us back to support at the BBC. And the zone, see how we spiked the BBC, touched the zone? It's almost like an obsessive compulsive kind of thing. We bounce up into red and falling, which sends us back down to the zone. That's support. Sends us to here. We don't quite make it to the zone. Now, this high right here, okay, this high today, Friday, Thursday, Wednesday, Tuesday. We had a bearish cross on Tuesday when the red line gets below the green line. That led to an extended move. And the first time price revisited that area, I mean, look at that. Happens over and over, again and again. And look what's happening here. On the way up, the step line in blue and climbing were running parallel to each other. Now the step line is about to cross to the right side of blue and climbing. If we continue to consolidate sideways, that's what will happen. And then we expect the retracement back to the BBC and this zone. That would be support times 2 and would present the opportunity for another leg to the upside. Now, there's probably more eyes on silver right now than there ever have been in history. There's more traders now than there have ever been in history. And while over 90% of all the gold ever mined still exists in one form or another, coins, bars, jewelry, the same is not true of silver. Lots of silver gets used up in industrial applications.
Okay.
So it's no longer available. We're just talking, Michael, about the fact that silver's been to $50 twice in all of history. And we're sitting right at, well, we hit 43.10 today.
43.10. How much is that up in like the last month?
Quite a bit. It's been steadily climbing.
Good. Well,
I can switch
it's bound to
this
happen
for a
eventually.
minute to a monthly. Where is that? Time base. Monthly. Okay. Yeah, guess.
No, it's a pretty good month right there.
Probably shouldn't have done that. All right, I better go back to where I was.
I only asked because one of our guys about 2 months ago, had some money and he was going to put it into silver.
Mm-hmm.
And I said, you can put it into silver, but silver, you might make $10 an ounce on silver. If you're lucky, you might make $10 an ounce on silver. Or you could put it into XRP. And this was down when it was below $2. I said, I would bet in the next 2 months, you're going to see a much more significant return on that. And he put some into XRP and he put some HBAR too. I don't know what HBAR has done, but I didn't want to go back for talking about the silver.
Yeah. We're just below the all-time historic high here on the ES. Yesterday we had an all-time historic closing high and an intraday high. We don't have a new intraday high yet, but there's the potential here. Even if we don't go any higher, we could have a new all-time historic closing high.
Mm-hmm.
But in the face of that, the step line still is trying to cross blue and climbing. So that retracement's coming. When and what will set it off, I don't know, but it's coming. So, all right, we're ready if you are.
All right. Let me grab stuff and bring it over here. There it is. There it is, my friend.
All right, looks good.
Refresh this page. The registration page will have all the new stuff in it. All right, here we go. Good afternoon, everyone. Today is Friday, the 19th day of September, 2025. Now, if you have not taken a free trial with us and you'd like to, go ahead to mytradingiq.com, click on the purple button right here. There's no credit card required for that trial. Just click on that purple button and it will bring you to, look, this registration page. I did this last night, where all that we ask for is your name, your email, and your phone number down at the bottom. Make sure you give us your TradingView login ID. Okay, give us that login ID, and we'll be able to enable the indicators for you. Hit the register button. This is different. The text is different. The font's different. Hit the register button. When you do that, you'll be sent everything you need to get into the room in the morning, and we will get your indicators indicating on your desktop for you. Okay. So today in the spreadsheet, if you're going to read it, you got to read all the CFTC risk disclosures down at the bottom. We had a pretty good day today. On the NQ, we're up 131 ticks. On the YM, we're up 35. On the gold, we're up 14. On the ES, we were -6. Now, the ES was not at the high of the day, but it wasn't at the low. The YM, we did finish at the high of the day on that one. The gold, we were 1 tick away from the high of the day on that one. 15 was the high. In the NQ, we did finish at the high of the day. So we had a pretty good day. 7 minutes and 4 trades this morning to get to $1,200 and 32 trades overall. So on the month now, we're $11,065 over 14 business days, averaging $790 per contract to our business day. On the year, we're at $195,510 over 161 business days, averaging $1,214 per contract per 2-hour business day. Now, if you were to quit trading when you get the goal for the day and add 1 contract per month, you'd be at 9 contracts now. And if you traded just like me, exactly like me, in the morning, you would have only had to work 22.26 hours, 22.25 hours so far this year, on the whole year. And you'd be up $129,879 gross, $124,212 net, my commission rate. And you'd be averaging $5,832 an hour. That is a significant amount of money in 1 hour. Now, it's not like you can just go work an hour and make that $5,800. You know, it's broken down. If you take all the minutes and you add them up into hours and then divide it, that's how long it takes. But it's over 100 and, how many days? 161 days you would have worked at 22.26 hours. So the average, I think I have it somewhere. The average, oh yeah, we'll do this. 22.26 divided by 161. So it's an average of 13 minutes a day is what it works out to. So far on the year, you'd work an average of 13 minutes a day, which isn't too hard to do considering, you know, it takes longer than that to usually take a shower or something. Anyway, that's what we did. So let's get into the actual trades. We had the ES is where we had the fewest trades. We'll start out with that one. Just knock that out. Okay. And here they are on the ES. Our first trade here on the ES, we picked up 2 ticks. Then we stopped out right there. That put us at -8. And then we had a break even there. Now that was, it's a different color yellow because it was an accident. I shouldn't have taken that trade and ended up with a break even on it. And then we had 2 ticks in profit on this one to put us at -6. And that's where we ended it. Since then, there has been, that was actually a trade right there that would have stopped you out. That was the only one. That was the only trade. Just one trade during the break that would have stopped you out. That was the ES. Now I'll just start with gold and work our way across. Okay, the rest of them are pretty much the same. All right, on the gold. We had a break even on this one. Then on this one here, we picked up 8 ticks, then 5 more to get us to 13, then 2 more to get us to 15. Then, where is it? Where is it? It's not in there. Okay, we had to stop out in there. I don't have it listed. I think it was this one right here. That should have been a red one, not a yellow one. Then we stopped out, and that put us down to 0. And then we had a break even, and then we picked up 14 ticks on that guy right there. We ended up with plus 14. All right. We had a break even right there at the end of it all. And let's see, during the break, Looks like there was a trade right here during the break. That has right at the end of the morning session. Actually, I didn't get it, but it would have gapped up in, I don't know if it would have enough time to move your stop to break even. It came right back down after it gapped up. There was a gap right at the end of the session this morning. I don't think it showed on the gold. It showed on the other ones. We'll get back to that in a minute. Looking through all of this. No, this didn't make it into the results, so nothing there. Wow. This was the next trade all the way over here. Went just enough to get the stop to break even, and then it flipped around, and this was a trade right here, and that didn't go enough to get the stop to break even. It was stopped out right there to the tick. And that was gold. Now the YM, let's go back to the beginning of all this YM business here. Here we are. All right, so our first trade on the YM, we picked up 5 ticks. Then the next trade, we picked up 13, got us to 18. Then we picked up 5 more to get us to 23. Then 2 more to get us to 25. And then we stopped out. That brought us down to 10. Then we had to work our way back up from that. Right here, we got 1 more to get us to 11. Then 9 to 20. And then 15 to 35. And that is where we ended it with the YM, I think. It is. Now, let's see, were there any more trades in here on the YM? Wow. All this and no trades. This one right here. That was a trade. And that was it. That one, possibly a trade here on the YM coming up right here, possibly a short, right? And I can see my YM dom, so I can take that trade if it happens to trigger. Let me open this question box up. There it is. Okay. I can take that trade if it happens to trigger. The ES we already covered. Now let's get to the NQ. This guy. And here we are on the NQ. Our first trade on the NQ was right here. We got to break even on that one. The next trade, I'm not sure that this is right. Our very first trade on the NQ, well, we might have had a break even, but then we had a plus 16 somewhere. I think that might be the plus 16. It's supposed to be. We had a 16, and then we had a plus 8 on this one right here. Somehow we got a plus 8 out of that. It was actually over here. We didn't stop out on that pullback. I must have entered in here. Because we got a plus 8 on that, and that's where we got the goal for the day. We're at 24 ticks at that point. And then we had a break even, and we went to 36. And then we had a 45 tick trade there. It got us to 83. Then we went from 83 to something else that I didn't have. I didn't write down, and then we went from, I wrote down that we stopped out here. We went from 83 down to 57. I didn't add this trade, whatever that was. And then went from 57 up to 62, 62 up to 70, break even. Then went from 70 to 115. So somewhere in here we had a 45 tick trade. I don't know if that was it. I doubt it. Went from then we went from 70 to 115, 115 to 119, 119 to 131. Okay, so this last one's 119, 131. So somewhere in here there's a 45 tick trade. I don't know where exactly it was. It might have been right here. I think it was probably right there. We got a 45 tick trade, and then that put us up to 115, and then went from 115 to 119, and then 119 to 131. And that was the morning on the NQ. Now, there was a gap at the end, this gap right here, at the end of the session. It did end up getting filled right over here. Now, with futures, in case you guys don't know, the futures of gaps almost always get filled, within minutes, usually. And this was no different. It gapped over here at 11:23, and it filled it right here at 11:30. As far as trades go, this would have been a trade right there for some profit. This would have been a trade right there for some profit. So, no, it didn't come on the result. That would have been a trade right there for some profit. That would have been a trade right there, probably break even. That would have been a trade right there for some profit. That would have been a trade right there for some profit. That would have been a trade for some profit. So the NQ had some really nice trades while it was running up here. Then it pulled back too deep. This right here would have been a trade that would have been a break even, and now you can see it flipped it around. So this potential short coming up there on the NQ. All right, and that was it. Whew. Seemed like a lot. Once again, we finished up the morning session with $895 a contract. On the month now, we're at $11,065. Okay. If you haven't taken the trial, go ahead to mytradingiq.com, click on the purple button, no credit card required for that trial. Click on that, go to the registration page, and fill it out. Okay, fill it out. All right. Let's see what we can take in here right now. Maybe we can. Let me blow this up for just a second. See, what I'm looking for in here, you can do to some degree with stuff that we already have, but I'm looking for fades, like something like this, where it went sideways on the down close, it means the next bar is going to go up. Or it goes sideways like this on an up close, it means the next bar is going to go down. That's what I'm looking for down here. Something like this right here, it goes sideways down there. On that down close, the next bar is going to go up. Sideways, the next bar is going to go up. Goes flat, the next bar should go down. There. Goes sideways, the next bar should go down. It went down quite a bit, but it didn't finish down. Next bar should go down, right there. Next bar should go down, right there. Okay, that's all I was looking at. Let's go to the end. Shut this off. You can see similar things happen with just the regular trigger. It goes flat on the top with an up close. Flat on the top with an up close, usually the next bar is going to go down. Flat on the top with an up close, usually the next bar is going to go down. Flat on the bottom with a down close, next bar is going to go up. Just looking. There's even if you use the ultimate slingshot, it kind of does it with that too. It's just not as good. Okay. It's trading the fade. Trade the fade. All right. Well, it's 1:18, so we have about 12 minutes left, and we could definitely get a couple trade setups in here before we're done. The YM just needs to pull back a couple bars, bounce off the midpoint. The NQ needs to pull back a couple bars and bounce off the midpoint. The ES is a little bit more work. I'd rather see it put in a higher swing and then come down. So get a flat spot up here on the top and then come down. That's what I'd be looking for on that. Okay. That's interesting. All right. Does anybody have any questions about anything at this juncture? All right, so we almost have a trade here on the NQ. We almost have a trade over here on gold. Just have to be patient. See what I mean about what I just told you about the trigger? That spot, next bar, that spot, next bar down. So it's in the overbought right now. It needs to get up and hit the midpoint and fail off of it. This down here. This is the TV trades range trigger. Just short-term movements in price when it gets to overbought, when it gets to oversold. Okay, so we got up here, but we didn't hit the midpoint for the down close on that one. Okay, so it's not a trade there. Yeah, we went over this a little bit in the partners meeting last night. Back when I was doing the divergence, I wasn't really doing it so much on the NQ. The reason why I stopped doing the divergence trades, I'll show you in just a sec. Okay, if you look in the spreadsheet, this is what we looked at last night in the partners meeting. If you look in the spreadsheet at the beginning of the year, this right here, all these numbers, which were awesome, was when I was just doing the divergence trades. Okay, all the way up until April, when the tariffs started. And I did it through April, but I started to do the conservative trades after that because the divergence trades work great in chop, but once you get out of chop, they don't work well at all. So I don't know if you remember, but with the divergence trades, what you're looking for is the blue to lead into the overbought to lead into the oversold when you have these two things on here. So when the blue leads into the overbought without the black, you sell the open of the next bar. When it leads into the oversold without the black, you buy the open of the next bar. Sell it, buy it, sell it, buy it. Just back and forth like that. And it works great when it's choppy. Like right in here where it got choppy, right there. Led into the overbought by itself, you sell the open of that bar. Led into the oversold by itself, you buy the open of that bar. Now I switch this to the ES. This is ES on a 19 range. But one of the things that Dwayne pointed out last night that I hadn't really even considered, you can always kind of make it so it's choppy if you go to a smaller time frame. And so, here on the smaller time frame on the ES4 range right now, if you still want to do the divergence stuff, When the blue leads into the overbought by itself like that, you sell the open of the next bar. Leads into the overbought, you sell the open of the next bar. Leads into the oversold, you buy the open of the next bar. Leads into the overbought, you sell the open of the next bar. Okay. That is trading without that's trading with the divergence. Okay. Now, if you have choppy markets, the divergence is great. But if you have trending markets, like if you have long trends like this, the divergence doesn't work well at all. Okay. It's like right here, you would have bought the open of the next bar on this. That would have worked out. You would have gotten 4 ticks in this and just stopped break even after a couple. If you remember 4-tick range, how to trade the 4-tick range. It's been a while since we've done that, but you were around when we were doing that. So you would move your stop pretty quick with that. A couple ticks in profit, you bump your stop to break even. Remember all that stuff, right? But this is basically what it looks like if you go to a 4-tick range on the ES. And most of the time on the 4-tick range, it's going to show chop enough like this so you can take advantage of it. Like right here, blew it into the oversold, you buy the open of the next bar. Blew it into the oversold, you buy the open of the next bar. Blew it into the overbought, you sell the open of the next bar. Blew it into the overbought, you sell the open of the next bar. You see, we discussed that a little bit in the partners meeting last night. So the trigger by itself is more conservative. If you're just waiting for it to come out of the overbought, come out of the oversold, that's more conservative. You're not selling when it goes into it, you're selling when it comes out of it. And when you have trending markets, that's where that really shines. Okay. And the midpoint is just identifying the best place to take a trade. Now you could take trades every time it comes out of the oversold if you wanted to, but identifying the midpoint is, the best place to take a trade, in my opinion, is right in the middle of this pullback right here. This is the best place to find support right there, because then you have this much space to get up to the swing high, right? And it's more likely to get up to that swing high. You have enough room in between there and there most of the time to get your goal for the day. Okay. Good. Well, just let us know when you're ready to come back. Okay. But that's why this is by itself down here now, because we have trending markets most of the time now. If we were choppy all the time, we could go back to the divergence trades if you want. Okay. Now this was an NQ chart, I think, right? Yeah, this was the NQ. Type NQ. QZ. All the U contracts expire today, by the way. If you didn't know, all the U contracts are expiring today. Right. Put that back down. This is a TV trades range trigger. Okay, it's not a TIQ range trigger. This is the TIQ ultimate slingshot. So if you passport, you get access to this basic version of it anyway. All right, this is not a trade here on the NQ. This is not a trade on the ES. This is not a trade on the YM, and it's not a trade on gold. And we're about to run out of time. We could have a trade here on the NQ. We have a trade here. I could put the context back on. We could have a trade here on the NQ. We need a down close on this bar. It's got a high of 675, so we'd be down at 175, something like that. You'd be selling right now. If the high stays where it is, then that's what you'd be selling. High points below the top of the bar. Now 725 down to 2.25, something like that. Yep, down 2.25. Yeah. And there it is. Nothing. Cancel all. All right, and we just ran out of time. I thought we were going to get a trade there, but we didn't. We didn't have any trades this period. All right, so let me show you this. If you haven't taken a free trial, let's go to mytradingiq.com. Click on the purple button. There's no credit card required for the trial. Click on that. It's going to be the registration page. Just fill it out. Make sure you have TradingView login ID so you can get your indicators indicating on your desktop. All right, that's where you want to be when you take the trial. All right. So with that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking the South Mile, America's largest city park. Dwayne is ready.
Yep.
There he is. Perfect.
Okay, recap of the morning session.
Today it took 7 minutes and 4 trades to get to $1,200 with 10 contracts on.
Good job.
Thank you. Thank you very much.
All right, guys, we covered all of the individual markets in granular fashion. If you missed it, about 45 minutes after I sign off, you can go to youtube.com/CFRN and see the entire broadcast in its entirety. We're very close to the all-time historic high, which is 67.1975. Right now we're sitting at 67.12 half. Okay, so it's very possible on a Friday afternoon, kind of surprising. To see this thing fold going into the close, that would not be so surprising. To see it continue to move higher, I would see that a little surprising, especially with all the outflow there was in the equity funds over the past week. But you got to embrace all possibilities. Anything can happen. To become a member, email Valerie, support@cfrn.net. Let her know you want to become a member, and she will send you the information you need to become a member. Once you become a member, she'll then send you all the information you need to begin your educational journey. You're going to get 2 hours of live training every trading day in our live training room. It's an interactive environment. On top of that, you'll get private one-on-one mentoring at your request. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. Just as I showed you today and show you every day. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. That's why it's so important you learn how to read the chart so that you know where to expect support and where to anticipate resistance. Now, over the last 7+ years, we've issued over 20,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. So, when I say you need to learn to read the chart so that you can know where to anticipate support and where to anticipate resistance, about 20% of the time or less, the market's going to do something other than what you expect. So don't waste time chasing holy grails that promise you there's some way around that, because there is no way around that. It defies the laws of science, physics, and even God. Don't get caught up in that endless, vicious circle, because they will drain every penny you have, and there'll be nothing left for you to trade with. Don't let it happen. The only secret to learning how to trade is to learn how to trade. And that starts with learning how to read a chart. As a passport holder, you get the Logic 247 alerts around the clock. And the purpose of the Logic 247 alerts is to teach you how to read the chart. You'll get the concierge trade alerts every evening the second they're published, typically 5 minutes ahead of the Globex Open. Every Monday morning at 6:15 a.m. Eastern, you get the new weekly trading zones. So you have plenty of time to get them on your charts before Wall Street even wakes up for the week. And every Thursday afternoon, you'll get an invitation to attend the members-only workshop every Thursday night at 8 p.m. Eastern. Last but not least, you get the golden keys that open all the private channels in Telegram. When you're on the trial, you have access to the public channels, so you can get the alerts, you can get the zones, you can chat with our traders. But once you officially become a member, then you'll have access to every channel. Everything a trader needs, all under one roof, one low price. Let's wrap up this week with our good word for the day. Reasons to be thankful. 1 Thessalonians 5:18. Give thanks in all circumstances, for this is God's will for you. Breathing is a complicated process. It requires physiological precision, and the average person takes about 23,000 breaths a day. And while we're inclined to thank God for everything that takes our breath away, maybe we should also thank Him for all of our other breaths. In 2000, Pastor Ed Dobson was diagnosed with ALS, a degenerative disease with no known cause or cure. Sharing his ongoing struggle to be thankful while living with an incurable condition, Dobson writes, "There are many things for which I am not grateful. I can no longer button my shirt. I can no longer put on a heavy jacket or raise my right hand above my head. I can no longer write or eat with my right hand. I eat with my left hand, and now even that is becoming a challenge. And over time, these challenges will get worse. So what in the world do I have to be grateful for? So much. Lord, thank you for waking me up this morning, that I can still turn over in bed, that I can still get out of bed, that I can walk to the bathroom, that I can still brush my teeth, that I can still eat breakfast, that I can still dress myself, that I can still drive my car, that I can still walk. Thank you that I can still talk. The list goes on. I have learned to focus on what I can do, not on what I can't do. I've learned to be grateful for the small things in life and for the many things I can still do. What do you have to be thankful for? Remember, give thanks in all circumstances. And that's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.